So those of you who don't know, I am Becky. Psychology is one of my loves for the stock market and my evolution as a trader. It's been how I am really dialing in success as trading, is having like real authentic psychology conversations and like owning my own responsibility in my psychology as a trader. And so that's sort of how I came to be in this position at BluSky, to have these labs on Tuesday afternoons where I talk about psychology and things that will help stabilize me as a trader. So everyone can hear me and see my screen. I suppose I'll double check before I get too deep into the presentation. Thanks, guys. Okay, I actually had this idea for this lab last week. Someone will say something and I hang out with traders a lot, virtually especially. And so I'm constantly just thinking about the conversations I'm having and what is a good way to come about topics that will help us trade better. And this one kind of came about last week, and I suppose it probably was related to the geopolitical situation that has been uneasy for quite some time. What I want to talk about is what is in our control and what is not, and how we can really embrace that conversation so that we can lean into what we can control and let go, release what we can't control. Because I think that there is a lot of power in, letting go of what we can't. There's, prayers around that. And it's for a reason. It's a statement that we all have heard of before for a reason, I guess, is what I want to say about that. So today, let's go over it. Now, what I want to talk about specifically is I'm going to break it down in this way, right? So what it looks like, what I'm talking about when I talk about what we can control, what that means, kind of delineate the conversation, and then what is out of our hands and what we do need to own in terms of our process and our approach as traders. And then I want to bring it all together towards the end, where I'm talking about the practical tools for building your system and staying grounded, so that no matter what the heck is going on in your home, in your heart, in your emotions, or in the world, you can stay grounded and have the most protected and safe and growing environment. Like, we can still, even with instability, we can still be successful traders. And I really wholeheartedly believe that, but not without attention and intention with what you are doing. So I don't know if everyone follows Stoic philosophy, but I kind of love it. And I think it's a really strong stance for a lot of things in life. And, it's not the only thing that I believe in or read, but I enjoy a lot of the Stoic mindsets. And this one, Marcus Aurelius, is an important person in that whole realm. And this is something that he has said, is you have power over your mind, not outside events. Realize this and you will find strength. And I love that, because it is a strength, a power pose, what have you, to not try and be in charge of everything and carry the weight of everything, but instead to let things go and to recognize that what we can control is what we can control. And that is a strong stance. There's an entire philosophy in Stoicism around that exact thing, around that truth of that power. And so it's not just wisdom, it's actually a survival strategy if you think about trading, right? Because there's so many ways to think about what we can control and what we can't. So there was plenty to work with on this conversation. So this is just one visual tool about what we can control. And there's really so much more, but I didn't want to make this page too busy. But a lot of trading anxiety and frustration does really come from spending mental energy in the outer circle, in the parts of our world that are out of our control, the things that we just don't have a say in, and yet we feel like we need to be able to manage and understand or anticipate, or like obsessing over price movement, our P&L for the day. We have control what feeds into that, but not really the end outcome. That there's a variable there. There's things that we just don't get to be the deciding factor. Elite traders ruthlessly redirect their focus inward instead. You design airtight processes and release the attachment to results that you can't control. But if you really just drill in explicitly to focusing on the best system and honoring it and respecting it and making it better, then the outcomes follow. And that is sort of the core energy of all of this, that's what, if we can drill into that, we do get better outcomes. And so this framework is kind of our mental reset button. You come back to it every single session. And one of our traders mentioned, they like to come to my psychology labs because it is a little bit of a mental reset and a focusing in on the parts of our brain and our body and our approach to trading that really should always be a part of how we're approaching being traders. And so that's what we're going to kind of drill into today. So the first part of this is what you cannot control. And let's be real, we are small, very, very, very small fish in the ocean. The market does not care what we have to say, what we would like, what we prefer, and how we like it to happen. She does not care. We do not have a say. So let's break that down and be really specific, right? So price action. The market is going to move with her own energy, her own logic. I refer to her as a lady, to each their own, but her own logic, liquidity, order flow, algorithms, big money makers, the absence of big money makers. There's a lot of factors that play into that, and it is not our opinions. Where we think it should go is kind of irrelevant. You get to have a bias because of the work that you've done and the way that you have studied, and you get to have information that would lead you to think a certain pattern would be next. However, that is your opinion and experience and view of the market, but it is not actually any sort of, you cannot control that. You cannot call it to be, you cannot insist this pattern is there, therefore this should happen next, and trust it, because she can do what she wants to do. And there could be factors at play that we just don't get to know about. And so then market direction, right? You can't control whether today is going to be trending or choppy. Conditions will change without warning or permission. Like today, we talked about in Power Hour about the bullish pattern that we are seeing on the daily and the larger time frames, the inverse cup and handle and the high base and the location of which the bulls were significantly bouncing from last week. So that was a massive pattern. However, like today was choppy, like there was trades in both directions. Like it wasn't a bullish continuation yet. We didn't see that nice trending bullish day. At some point, there will be that, likely, if a lot of factors play into that. But we have to just trade the day in front of us. We don't get to say, I see this pattern, therefore this day should happen. What the heck? You gotta just let it happen. Now, this is so poignant for today, but news, right? News and the potential catalyst of those. We don't get, Trump is not asking our opinions. He just is not. We don't get to have a say or an opinion or a vote on this situation that we are in on this 7th of April, 2026, because there's threat of nuclear chaos, and that just is looming, and we will wait and see and hope for diplomacy. But it is what it is. And so economic reports, federal announcements, geopolitical events, FOMC decisions that could, be a surprise at any given series. They're going to hit when they hit. Sometimes we know when they're scheduled, and sometimes they are not scheduled, and sometimes they're scheduled for 5 p.m. Pacific, and the news comes at 3 p.m. Pacific. Who knows? Like so these things are not in our control. We can study them and listen and pay attention to the tweets and the posts and the Forex calendar and anticipate when something might come, but always be on guard. Now, other participants as well, like I said, as prop traders, as retail traders, we are very small fishes. And so institutions and higher time frame algos that have a lot of energy with them, retail traders, all act independently, and we're all in the same markets, but there is different energy and intentions and insider knowledge and outsider guesses. And so our voice is very small in that very, very crowded room of a lot of factors at play. So none of these things, the other participants, the news catalysts, the direction and price action, the day that we are having, those things just happen, and we have to be kind of open to receive them and curious versus thinking we have any sort of control over them, because we just don't. So I think technically, personally, outside of that bigger picture trading situation, our intimate situations with our profit and loss, that is an outcome. Now, I think a lot of people, especially early traders, because I was totally guilty of this myself, I felt like I needed to own and have control and significant power over my outcomes. Like I felt like I needed to be able to earn $500 a day. And like, if I didn't, I wasn't feeling good about it. And I should trade to a number. And I have since kind of matured past that a little bit, just based on experiences, because chasing a set P&L has got me into some trouble. So I think it's dangerous, because when traders focus on hitting a daily dollar target, they begin to force trades. You can override your rules just to get there. You can revenge trade to claw back out of a loss. And that's because we're trying to control an output rather than an input. Does that make sense? So the output is the P&L, where it's like, this is the end money that you get at the end of the day is based on your trading. But the trade opportunities that you get are not always clear when they're presenting. And if they are, sometimes you can't quite get the ideal entry, or the candle sizes are larger than they used to be when you made this trade plan last year. And so you have to approach them with different leverage, which might slow you down in the moment to figure out your leverage. And so there are not a lot of situations where two trades are created equal. And so having a good setup, but different leverage, different, contract size, trade size is going to set you up for a little bit different situation. And so maybe your goal is $500 a day and that feels really good and you can build your accounts. Maybe you're a trade copier. And so it's even more than that. But you hit, $395 and it was a good trade and you're not really sure and you're uncomfortable and you don't have another good setup. Well, what do you do in that situation? Do you stop at $395 and call it a day? Or do you try to grab $100 more just to feel like you can check that box? This is why I'm calling this a dangerous mindset, because in that situation, if you're going to force one more trade that is not your best setup, you can really give back that $395 and end with a max loss day in 15 minutes time very easily, because I have done it. I can say that it happens very easily because that slide actually is a water slide at times if you are not paying attention and you start to fight with a situation when you are hunting a dollar amount instead of trying to be the best trader that you can be. Your P&L on any given day is a byproduct of your process. So it's not something that you can just dial in and lock in and take it. And treating it as a source of holding you up as a trader and believing yourself and positive momentum, it's kind of destructive because it can put you in a different headspace of I need this amount of money versus I want to only trade my best setups. Those are very different approaches and views on what a successful day is. And one is stable and strong and logical and repeatable and steady. And one is, kind of focused on the money and not the skill. So I love this reframe of not did I make enough money today? Did I make money? Am my accounts green or red? But instead more am I following my rules, my entry criteria, my stop loss management, my risk management, my account parameters for the size that I trade? Did I take only my best setups that the market condition called for and that I saw in real time and was willing to risk on? And did I sit on my hands when the conditions weren't there and it wasn't ideal? These are big wins and they should be appreciated, journaled about, reflected on, gauged over time. Am I getting better about only following my entry criteria and always honoring my stop loss? Because this is a gauge. If you start with kind of messy, crazy habits that a lot of traders start with, if not all, and then you start dialing it in, you will see improvement in these specific metrics in this green box, just as much as you will see improvements in your P&L over time because the P&L follows. I've said it before, and I'll say it every lab if I need to, that the P&L is a lagging indicator to good, intentional, purposeful, strategy-based trading. And that's the same thing with this, is that the P&L is an outcome that is not necessarily in your control. It is the byproduct of a strong system and following rules within your system. Another thing that is really just not in our control, which I wish it was, I would love that to be, thanks Woodward, is that your time horizon to success is not your choice either, which sucks because I would love to be able to tell everyone that there's this gorgeous sunrise at year one where you just flip the script and you go from struggling to profitable. And then once you become profitable, you never ping back to unprofitable. I would love to be able to tell you that promised land exists, but I am not really into lying. It's not my jam. So I'm going to tell you the honest truth that your time horizon to success is not yours to specify or mine to advise towards, because it's a kind of a painful reality that we don't get to decide when that proficiency arrives. Some traders, it clicks really fast, and others, it takes years. And the market, it doesn't issue diplomas on demand. It doesn't say I have done this entire course from this person and he said I would be successful with just this course. And so what is happening? You know what I mean? Where's my money? Where's my return on investment? That is not actually how it works with trading, which sucks because, you go to college for a certain degree and you graduate and it's a great market. Then you get a job and you start getting a paycheck, 2 + 3 = 5. Trading is, 2 + 3 divided by 28 times the exponential average of 42 times 12 equals sometimes 7. That's the trading trajectory. Did anyone follow that? You guys know the answer to that math equation? Yeah, me neither. Whoever was listening. Don't compare your timeline to others. Oh, you hearing me? Don't compare your timeline to others, because I was not profitable at year one. And I am profitable at year 5. There was all kinds of things, ups and downs in between there. And you gotta just take the hits and figure out what your strategy is, what you like, what you're leaning into. Someone else's profitable period doesn't mean that it is that yours taking longer than that means that your trading goals and life and journey is going to fail. It just means that it's not your data point. That's their situation. We all come to trading at different points in our adulthood with different background stories, different, emotional trauma sometimes, different things that we have to work through, things in our psychology and our nervous system that we have to reframe, train, adjust. I think that is very real, that each trader is just a different human and has to work through different things. And so that's what kind of leads to this different profitability time horizon. Maruf, I took my first profit from, well, I had little profits, but the thing I first pulled from a trading account into my bank account as a profit was at year 2 years and 4 months. So over almost 2.5 years is when I first took my first profits. And that was over 2.5 years now. I just took over 5 years, and the last 2 years was profits. I know it feels like 84 years. I got a little sweaty answering that question. But you know what? That's my truth. And I will be honest with you, I've got literally 1099s to prove it. But it took me 2.5 years to have profits as a trader. I want to say on this literal slide that we're on, we all come to trading with different situations too. I think that whether you have children that require you every day, that means you get less screen time, or you get less sleep because you're in at night. If you don't have children, but you have a full career that you're trying to do, you still work all the time. If you have a medical diagnosis that you're trying to work through, some days you're really sick and some days you're really good, that's going to slow you down. If you're young and you have all the time in the world, but you're cocky and crazy, that's a different set of hurdles to work through. And so each journey really is independent to each person. I had a baby in there, and let me tell you that pregnancy hormones turns out was not super helpful for my stability as a trader. It was honestly comical at times because I'm like super pregnant and crying over a futures trade. It was a moment in my life that I will always enjoy. So expect linear progress. Expecting linear progress is not it. Basically, skill development in trading is just not linear. You're going to have breakthrough weeks followed by brutal drawdowns. And that is the path. It is not a detour from it, which is a key point that I just really want to drive home, is that when I was pregnant and I made the lack of money, then that was not necessarily a detour. Well, it was kind of a detour, but it was also my path. So, you know what I'm saying? Like my poor husband, we're still married, so he's a good man. You have to embrace the season that you're in and work through the things that you need to work through. Maybe it's a pregnancy. Maybe it's your wife is pregnant. Maybe you're someone in your family who you love dearly has a significant new medical diagnosis. And there's so many human things that will happen that will be a little bit of an adjustment. And it doesn't necessarily have to be like a fall off your ability to make profits, but more so, you have to adjust and pivot. And hopefully being in a community like this, and we're constantly telling you guys to manage your leverage and trade carefully, that will help, because sometimes in the situations where something is going on, an extenuating circumstance that makes you a little bit off kilter with strong sleep and focus and ability to really dial in your trades, maybe in those situations you do listen to your coaches and leverage down a little bit and work with the situation that you're in, because you got to make your journey your own and trade with where you're at, and trade, if you're futzing with and something that worked last month is not working this month, then maybe your system needs a little bit of work. And so that situation, you leverage down and you drill in. That's the journey of this. And so there's work within this that is within your control, but your time horizon is not, I suppose, is the moral of the story. Okay, so I think you guys get it with what we can't control. We can't control the big extenuating circumstances that will make the market do all kinds of things. We just have to, be the observer and trade within that situation. And then we can't control our profit and loss and our time horizon to success. And those are the biggies that I really think that is important that we all kind of remember in the back of our minds, that when those things are not doing what we would wish we could, what can you do? How can you let them go? So we'll talk about techniques with letting them go in a minute. But what is in our control is another important thing to really embrace and respect and take responsibility for, right? So on this one, I want us to think about how your process, right? Your process is your edge. And I love that, because when you cannot control the market, you do get 100% ownership over the conditions under which you trade. That's your process. You get to be the architect of your trading experience, of your edge, of executing your edge. And so let's break that down, right? Because the trading process and our strategy, our trade plan, our trade approach, there are multiple pieces within that. So pre-market preparation, reviewing key levels, economic calendar, you're defining your playbook, all of that happens before the bell. So That means when you wake up in the morning, you decide when you want to trade, what your trading session is, what you feel good about, where your edge is, where your trade ups present, whether you're an opening bell trader or you want to let the first hour progress and then you trade after that initial balance is giving you some information. There's multiple time opportunities within a 24-hour period to be a futures day trader. But pre-market, pre-trade session, what do? You want to come to your charts rested, hydrated, what have you, at your best physical ability that you can, because this is a peak performance, right? Trading is a peak performance sport. So come and do your pre-market preparation as if you are treating it as such, as if it's game day. So review your key levels, review the economic calendars. Is there anything you can anticipate, such as, PCE information data hitting 30 minutes into the market open? Have that on your radar as something you need to factor in. And then define your playbook before the bell. That's the work we do on the back end of going to class and studying and having trade setups and a strategy that you honor, knowing how you get in and out of trades. That is the work that you can do ahead of time. And I do say show up for a game because each trading session can be considered a game. There's tons of ways to practice. You come to labs, you work on the weekend, you do back testing, you work and a community to build a stronger system. But when you show up to your trading session, you are a peak performance athlete and this is a game day, So treating it as such and respecting it that way, if you want to try and rest before and show up and make sure your eyes are wide open and you follow is important. That's in your control. That's something that we can respect. Think of Kobe Bryant, everyone. Everyone in the entire world knows Kobe Bryant, and his preparation, his back end studying, and then showing up on game day is very rarely paralleled. So that's what I'm talking about here. I mean, not everyone's going to be Kobe, and it doesn't have to be quite to that level, but that's treating it that way will get you a better result. Now, trade plan specificity. This part I love because this is also within our control. And this is something we can really, as traders, like this is where you can like nerd out and get really good at your jam. Like you can be a certain trader. You can be a 1-minute trader or a 5-minute trader or a 4-hour trader swing trading. But define your plan. So define your setups, have clear entry criteria and a non-negotiable stop loss placement, and then management once the trade is underway. And then a targeted plan before every trade, right? So having that predefined takes out the anxiety in the gray area and the ability to mess with it because you don't have to think about it live time in the moment when the money is fluctuating to decide how to manage it. Instead, if it's your A+ setup, then you have seen this before, right? You have seen this, you had studied it, you had made notes on it, and you know how to get in and how to manage it. So then it's less of a gray area. And so you can control that by doing the prep work ahead of time, knowing specifically what you want to do, and then executing it. Now, those are obviously the two biggies to getting your outcome for the day, but I would argue that also a post-session review can be a big part of that as well, because you want to be a holistic trader, which means considering that active reflection on what you are learning, what you did right, what you want to adjust. And so you want to actively grade yourself on your execution quality. The priority should not at all be the P&L of I hit XYZ target in dollar forms or the day ended red or green. You can factor that in and have that on your trade journal for sure, because it's kind of background information of what took place in that day. But definitely put a lot of energy on your execution quality over the outcome. And then also, your psychology while you were trading. Were you neutral? Were you balanced? Did you honor your trade plan to its fullest in terms of, taking profits at certain targets and then managing your stop in a certain way so that it didn't go from green to red, go all the way against you if that is your system. Think about all of those things. And that, I think, is where your growth can compound, because the lessons, you're critically thinking about the lessons you took from that day. And so having these 3 phases of your trading session and taking them seriously, that is within your control. And these 3 things independently will make you more successful quicker. But if you do all 3 of them, it's like 3x. Like this is serious growth potential here. If you fully decide to own this slide alone, if you're only listening to today, if this is what you choose to own as a trader, this is how you become a long-term profitable trader, by saying, I own these steps and I will honor them all the days. And if I'm fumbling somewhere, that's a part of my path. And there is something I need to learn on that and do better, and ask a friend, ask your accountability partner, ask a mentor. We are totally here for you guys. And shoring this up, like it is a recipe for success. And that is in your control, right? So specifically on the trade setups, this I wanted to dial in because this is something that you do want to have the specificity on your trade setups. So this is where you get to make it your own, like Matt and I might talk about a different setup that we like because we see the market slightly different and we trade different time frames more often than not. And so we're going to have slightly different information on this because of who we are and the trade plan that we have built and developed over time. You can't control whether a trade works, but you can control whether you entered at the right place for the time of day you're trading, the size you're trading, the condition, the time frame that you're trading, the size you want to have based on your account size and the amount of capital you need to make sure you're preserving so that you can live to trade another day. And then you exit according to your rules based on what sort of like extension you are expecting for the trade that you are in based on the time of day and when it might have a rebound, profit taking. So this all gets to be figured out by you and with the help of a community mentor, of course. But you get to figure out and dig into where you want to get in, how you want to get in, what size you could do based on the situation that you're trading, and then how you're going to exit and manage your risk as the trade progresses. And so this is the craft of trading. This is the beauty and the passion and the intention of like making it your own, of really kind of embracing your ability to study this and make it something that you can see repeatable with a higher probability of success, ideally. And this is yours to develop, which is pretty cool. Like we get to have a market that is full of abundance and opportunities and fake outs and risk. When you're a trader, you have to respect all the sides of that. And you have to make your system around that to work with it and to let the opportunities set up before you shoot your shot at them. And so this is a beautiful part of like a broken down inside of a trade, how you really want to put in some work in your downtime and back test it and forward test this and let it take time to really dial it in. But then once you have a successful system, you get to choose if you honor it. You know what I'm saying? So a little more specific on that. So the risk management side, right? The last page was getting in, getting out, like defining your setups. Now, risk management is something that each of us do slightly differently, but having a strong risk management system is really important. It's really key to longevity in the game and capital and account preservations because you don't want to pay a million resets or blowing real money and having to refund or what have you. Or this is when traders quit if they don't have a risk management system. You know what I mean? Like if you don't watch your back end, this is a dangerous situation that can snowball, and our finances matter. Most adults have bills, if not all adults, because you do need to be able to pay your bills, but you also have to have some capital to one degree or another, whether you're funding your own account or you're paying for, the prop companies to hold the risk and you trade with those accounts. Either way, you do have a financial investment in your trading that you are doing once you trade live. And so having a strong risk management is not optional if you want to succeed in the game. So this is the one variable that really does protect your castle that you're building. It's like the guards at the outside of your castle that allow the walls to hold. And so you want to respect them and honor them and tell them what to do and then let them do it and not monkey with it. You can't be the king or queen and the guard. You need to set expectations and then let it be handled so that your walls get to hold. You know what I'm saying? So a couple different parts of this. And sizing has to be said in terms of risk management because how many contracts you trade is a choice, and never letting a single trade threaten your account survivability is a big deal because you don't need to have like make or break days where it's all or nothing. I mean, traders will do that, especially sometimes with evals, but I would just say it's stronger instead to let it build and like trade an appropriate size that is repeatable on multi-days so that you're not resetting every day. You'll just save a little bit of sanity and a little bit of money on trading a little bit more of a reasonable size and then letting good trades compound. And then, like I said, that P&L is a lagging indicator, but it does come by appropriate sizing and a repeatable, strong system. So pay attention to your size. Everyone's a little bit different. I mentioned actually in Power Hour, what I do is when I'm trading well and the market is feeling more predictable, my normal size is 1 to 2 minis on the ES usually, although I trade other markets too. But when we have had these higher volatility moments, I have scaled back to either 10 or 12 micros. I will go in with 4, 4, and 2 or 4, and then I'll scale out 4 at my first target, and then 4 at my second but higher good target. And then I will keep either 2 or 4 as a runner, depending on what type of market I think I'm in and the potential that it has. Now, for me, I do snug up my stop loss after my scales. And so that just depends, again, on the trade that I am experiencing. But sometimes we get really steep retracements. And so I have sized down and I manage it in an active way so that I can lock in profits all the time and I can protect my accounts and I can still have more shots to fire if another great setup comes. That is a way that I have chosen to approach this higher volatility and recognizing that I get to play with it. Like I know 12 micros might seem like a weird number to certain people, but let me tell you, I have dabbled with all kinds of micros while I am figuring that part of it out when I'm choosing not to trade a full mini. And I recognize that 12 micros might seem like I'm paying more commissions and I'm essentially trading one mini. However, it's different because you can scale in and out of that position. And if I can put it on a teaser position of just 4 micros, and then I add based on when I see confirmations and when I see this trade is working out, that's how I build my full position. And so that being said, if I get in with 4 micros and the trade isn't working out right away, then I only get stopped out somewhere, either not my full stop because I don't like it because it's not working out, or the regular stop where I put it at the start of the trade was indicated. One of those two options, either it's closer or it's as previously planned, but I can take it with only a third of my size. And that's a way less hit than one mini. See what I'm saying? So that is a way to, for me, I've had to work out, like I want to get enough points where it feels like it matters at the end for me, for where I'm at in my career. But I want to be able to scale and I want to be able to gauge my trade and see what the volatility is giving me. So that position sizing, super duper in our control and individual to who you are, how you're trading, what your account size is, and how you like to approach your opportunities. If anybody's worried about communities there, what did you say, Amara? If anybody is worried about communions, they are doing it wrong. Stop loss placement. Okay. So this is a big part of risk management here too, is stop loss placement commissions. Yeah. Okay. Thank you. I was like, that makes so much sense. Communion. I was like, wait a minute. You're good. I completely agree. Don't worry about commissions. Worry about doing the right thing for your accounts and your setups. I completely agree with you on that. Like that is a part of my thing too, is yes, I'm paying more commissions on 12 micros versus one mini, but I want that ability to scale in and scale out of my trades. And I don't want to have to do 2 full minis right now. And I am a scaler. I like that approach. I really like being able to lock in some profits and adjust my position size when I am trading the smaller timeframes at peak volatility, such as market open for the New York session. And you know what? It's a cost to play. Like commissions used to be more actually, in the 80s and stuff. So don't worry about that. Very good point, Amaro. Now, stop loss placement also in our control for risk management, right? It's a decision that you have to make. But I do like what I put here, and I want you guys to hear this part of like, it's a decision you make when you're rational, not in the heat of a losing trade. So if your stop loss is being threatened, that trade went against you. And so that your emotions automatically are taking a little bit of an uptick, right? You are starting to flirt with fight or flight, and your body is starting to flip into that emotional situation when your trade is going against you, because you got into the trade because you thought it would work, right? That's why we get into trades. And when it goes against us, we can start to feel defensive and anxious and worried. Those emotions are not the emotions that should be the decider on how you manage your risk. Instead, you want to have your setups predefined and understand where an important stop loss would be and why. And so the whole point of a stop loss, right, is to say this trade setup is a rejection at this resistance level as evidenced by a break of the 5-minute candle and a close below. Then I want to take it to the next lower level because that resistance held and we are breaking structure down. Okay, so if that is your trade setup, where does your stop loss go when you get in? And maybe you get in on the break of a 5-minute candle and your stop goes above the 5-minute candle that broke it. Okay, so that is your decision based on that trade setup. And so it is a rational choice when you are not in the trade. When you are in that trade, you should honor your pre-planned approach to this setup. And so that is not the time if it starts monkeying against you, it starts pushing back up. That is not when you take on more risk and you move it just one more candle up because maybe it will hold higher. That's not your setup. And then you're accepting more risk, sometimes double, sometimes even more than that. That is making an emotional choice when you are in a red trade. And that is a dangerous point. That's a dangerous choice 10 times out of 10, because maybe it will work. And maybe you do it because you've done it and it has worked. However, that is risky. It's risky because you are doing it with your amygdala, your emotional brain, not your logical focus, trade plan strategy brain. So setting up your trade strategies beforehand and then honoring them in the moment is in your control and something that you want to do when you take this as serious as you should, because trading is your business. These finances matter. This has the potential for true financial freedom, but it's really, you get there much faster by honoring the respect and the business aspect of this entire opportunity that is trading. Now, this last one that I want to mention is the daily loss limits. Not everyone does this. I think this is something that is talked about a little bit less in a lot of communities, but I learned about it some time ago and I do embrace it, because knowing when your day is just not your day and expecting and respecting that is powerful for longevity as a trader. So knowing when to close your platform is a skill. Hard stops on daily drawdown protect your capital and your psychology. And if you lost your first 2 trades, there is, I would say 1% of traders that are not emotional in that situation, and maybe 0% who have been traders for a year or less that are in the position to not be emotional after more than one stop out in a row. So if you know literally by math of probabilities that you are starting to switch into your emotional, frustrated trading energy, you're no longer trading as super pure focused energy, ready, intentional, dialed into your trade plan, there's a risk there. There just is. And so knowing when to shut it down for a day and come back another day is strong. And I would argue if anyone out there watches content on YouTube about traders from like physical prop firms, such as like S&B Capital is one that I consume some content from. They are traders, skilled multi-7-figure traders who trade in an office building with a risk manager in-house, with bosses in-house, with P&L visible on screen. So the whole team knows what they're doing. And when they hit a threshold of losses for that day, they're shut down. It's not their choice. They are profitable, successful traders with a team with all the support around them. But some days they don't see it and they are invited to stop. And it is not a request. And I would argue that that is a strong choice, because if you just can't see it and you're starting to tilt, having your system kick you out and be like, better luck tomorrow, go for a walk, go pet your dog, go play with your kids, go make a sandwich, that you just, the next day, you will say thank you. You will be grateful to having this daily loss limit in place because your account survived and you have capital and you had rest and your evening was salvaged because you didn't take an outsized massive loss or blow your accounts. But instead you had a red day, which is a part of trading. You are a trader. You took on risk and it just wasn't your morning. And so, but you're safe, your accounts are safe, you can still do this. This Alexander Elder quote, the goal of a successful trader is to make the best trades and money is secondary. And so these are all things to protect you. And if you can't do the best trade and it's not working out, and heaven forbid you are stopped out or you hit your daily loss limits, that's a day to be able to stay steady enough through to be open to the lessons. And Morados, like, I think if we were all honest, a lot of us work through all of these things all of the time. I think it's a part of the work of trading that, again, is not on some set time horizon. It's not like you can have focus on these for 6 months and then never have to second guess them again. More so, it's a choice every day. And I think that that's such a powerful approach of making the choice every day to choose to control these things. Risk management is the clearest expression of self-discipline in trading. It's not a sign of weakness. It's the ultimate act of professional control. So, I mean, that's just how I really feel, that we have that responsibility. And holy moly, is already 44 after. Well, I might talk a little faster, you guys. Your emotions. Okay. So your emotions are a big part of it as well. And you do get to manage them. So part of it is out of your control. When you are triggered and your emotions start to ramp up, there is a literal physiological cascade that happens in your brain and in your hormones that fire them up. What we get to control is how we manage them. You don't necessarily get to control what triggers them, but you can choose how you manage them, because fear causes hesitation on valid setups, exiting early. And so that's too much of a connection maybe on the outcome. And so you've got to work on trying to not be overly connected on your P&L, instead just trading the setups. Greed is also an emotion where you can get into trouble with over trading and moving your targets and adding to losers because you really want it to be green and not a red trade. And so you that really want the profit. You want to end green, and that's the only choice that's going to happen. That mindset needs some adjustment and some active management, right? Same thing with frustration. If you're irritated with your trade, you're frustrated about how your morning is going, you can abandon your rules. And so that is sort of a resistance to, again, it's kind of being a little bit more stubborn. So I would say that discipline is also a choice to manage. You want to build and focus and lean into the things that shore up your discipline. So repetition and self-awareness, a structured reflection of saying, I really honored this target and it did work out. And previously I would have gotten greedy and fearful and scared that my trade was going to go against me and closed it early. But instead I held to the discipline of letting it play, being patient, letting it get to my target. And I was rewarded because it did get to my target. So having that reflection on your discipline, that way you can encourage more discipline to come. And then the inverse with those others, with fear, greed, and frustration. Try to be constantly cognizant of when those creep up in your trading, what the signs are of them, and what you can do to slowly shift and manage them a little more effectively. So recognizing your patterns before they cost you. behavioral patterns that you can own is the patterns that you do in your whole life. So your sleep habits, your emotional state, how you are fueling your body, and being self-aware on if you are trading from your ideal situation, right? Your ideal approach to trading. So are you rested and you're sharp? You're treating it as a peak performance sport. So you're showing up awake, ready, like positive about your day. Maybe you do a little meditation to zero in on remembering your process and how you're going to honor your best trader self. That is an absolute edge by having these patterns in place that support your best opportunities to be a good trader. And we all kind of know it's different for everyone. I've done a session here about your pre-market routine. Well, I think that there's like 10 or 12 things that I mentioned in that session. And each one of us is going to have maybe 2 or 3 of them that really make us feel on point in the morning. So I would encourage you to watch that video if you haven't, but then just do what you need to do to feel at your best and highest capability to execute ideally. Here's some things that you want to stop doing if you're doing them, to have awareness on those and control it. So over trading after a winner, which is like a hero trade, right? Like I just took the sick win. It's still flying. You're going to take some more. You're going to take the whole move because you're going to get back in. Well, you got out for a reason. So that hero trade of getting back in, you could easily give it all back. Like on these big pumps, you think I'm going to get a piece of that, but you weren't expecting it. You weren't ready. You didn't get a good ideal entry. That can try to be a hero by taking the second leg of a big pump, but it could have been it was fake news and it fell back. And so that one can kick you in the butt. So if you notice that's a habit for you, try to not. Freezing after a loss could be a potential habit that you want to notice in your trading, notice in your journaling that that's something that you're doing, and choose to try and manage that, because that's an inner emotional thing as well. Yeah, high level of self-control. And I think you get to that higher level of self-control by self-awareness, by journaling what you are doing, how it's playing out in your trades, and what you could adjust to do better with it, how you could break the cycle. This picture on the screen here is the different trigger. Like you can be triggered by missing a trade or taking a loss or being taken out by a news candle that just flew in the other direction that was unanticipatable. So you could have an emotional response and get in all kind of trouble after that trigger. Or you could break the cycle by having that strong self-awareness on, this is something that I've done in the past and I don't want to do it again. I don't want to have a tilt spiral. I don't want to second guess all of my setups because this one loss based on whatever XYZ circumstances. So pay attention to what you're doing, what your outcomes are, how it's working out for you, and then try to just actively break the habits that are hurting you and feed into the good choices that you're making, because we do have control over that awareness and then what we do with. So this is really good, this pause ritual. And so I want to encourage you guys to think about this for like an intraday trading tool. So this is part of why I want to like bring it all together towards the end here of like, what can we do to shift ourselves, right? There's a lot of things we are in our control and not in our control. And there are things we can do to do the best with what we can control. And breathing, it really actually does help. Like we've talked about this physiology behind it, but it slows down your nervous system. So taking a couple of really deep, slow breaths, whether it's box breathing or what have you, just the whole element of that is taking some deep breaths to reset your nervous system. It will slow down your heart rate. It will slow down your respiratory rate. It will heighten your focus, and you will be able to refocus on your system way faster if you can slow it all down with those breathing exercises in the middle of your trading day. Whether you're in trouble or you're not in trouble in your trading, it will help you trade your best, regardless of the situation. Now, also, I would encourage you, especially if you trade more than just once or twice in the morning for a short period, to take breaks during the day and assess, am I process driven or am I reactional right now? So always keep checking in with yourself, have little prompts at your trading station where you want to make sure that you are staying focused on trading your system and not getting into the emotional state. This is where an accountability partner can really be helpful, because if you're not sure, if you think that maybe that last trade was a revenge trade, think critically about it and then reach out for help if there's potential that you are getting into a reactive state. That can help you break the cycle too. So putting it in a little part of your day of maybe every hour. If I'm in a trading session, I set an alert on my phone to have this little 15-second check-in of, am I trading my process or am I feeling some kind of way about wanting to take some money from this market right now? And that little momentary asking yourself that question can really sort of put your mind on, am I doing what I should do or am I doing some monkey business? If you need to stop, then you need to stop. If that answer is, I am absolutely in a revenge trade right now and it's not working out, shut it off. Shut that business down and take a little break. Step away from your screen physically. It could be also if you do that little assessment, you're like, I'm actually starving and really need the restroom or something. allow yourself to have those breaks from your screen. They can recenter you, refocus you, and be a little bit of a pause where maybe you need to just make sure you are on point, because this is a high performance sport, trading. You want to make sure you are operating at your highest skill. If you're trying to extract money from a market where there are a whole lot of factors at play and you are a small fish, make sure you're always on your A game. When you decide to go back after your pause, if a little step away was indicated and you honored it, then make sure when you do come back, you feel good. Maybe you're really not that triggered, but you just recognize you are a little frustrated, you're a little shaky. Well, maybe you're low glucose and you need to have a little snack. You've had nothing yet and you have been in your charts longer than usual and your body is used to fuel by this time. You took a little step away. After you've had a snack, you've had a quick movement, you've met the needs of, a child or a pet or whatever, then you can return with intention and be ready to capitalize on the next opportunity. But if you do step away and you're like, man, I'm so mad, why do I have to have that thing? You recognize that you're really frustrated. That might be the time where you make the strong choice for yourself and your system that I don't feel at my best right now. I think today is done. I think today's trading session is done. There's going to be more opportunities. I am a solid trader in a great place with my trading. I think that let's close it out, shut it down, maybe walk to your office long enough to close the platform you execute on. Because you can't control everything. You just can't. You can't control your outcomes. You can't control your P&L. When your trades close, it is what it is. You can't control being wiped out by a news scandal, but you can control how you respond to it. And a pause ritual that has you have the little check-ins, you can choose to stop and cut that cycle stop it in its tracks. And this gap is a development of discipline. This gap is choosing to have discipline in your trading system where you make sure that you are always doing your best with your trading setup and your opportunities and honoring your system. That's really powerful. Now I'm going to nerd out a little bit about us at BluSky, because I think you need to have an infrastructure around you. Not everyone has this. And if you don't, I would encourage you to try and think about ways that you can cultivate this, because having a strong support system is so helpful. And it can look any kind of way. Maybe you don't have a supportive spouse or family or friends. Well, then maybe you need to adjust what you share with those people. But you can lean into a strong community. So no trader performs at their best in isolation or in conflict. I think that the people around you, family, partners, friends, trading communities, they can either be stabilizers or stressors, and you get to influence both. You get to have a say in what you let in here and what you compartmentalize and specify who you're going to let have what access to you. So when you are communicating about what you are doing, if it's someone who's very close to you, then you can let them know, what it means to you, what the experience is, what the trading demands, so that when you're at your trading system, they are supporting you instead of accidentally maybe undermining your focus and your ability to execute to your best of your ability. If your spouse knows that you trade really well when you really have peace and quiet to hear your own thoughts, maybe you can just say, I love you endlessly, but can you just let me have this space for this hour of time when I think I can do my best trading, and create that in a safe, positive conversation. Ideally that will work well, and you can have that focus to do your best work when you're trading. And then have, accountability or a strong community. Maybe you have found someone, an accountability partner that you can communicate with on this, but a trading mentor or community that can help you hold to your process and not your P&L is super valuable infrastructure. So all of us coaches here, I know we've all said it in our streams and when we are on stage here, but we do not mind you bugging us, asking questions, asking for support, asking for back end, positive guidance. 100% hit us up. And I am speaking for myself here too. If you don't have anyone or you're still fine tuning that, I really think we have a strong community here at BluSky. Find people within our community or lean into us coaches as well. And we got you back on this, because there's plenty of success for all of us to have it. And I think being open communication with other traders can be a massive deal when you have different situations going on at home. Okay, so this is really helpful because I think it will help kind of stabilize us all in terms of the balance of this, because trading is a lot. It is an exertion. It is a stressor. You can worry about your P&L. You can worry about money. You can worry about time horizons, what other people have to say about your trading. There's a lot of ways that it can feel like a stressor. But if you can detach from the markets at times and feed into other parts of your life that also bring you joy and movement, that can be really valuable. Now, this looks different for everyone. What brings you health and stability and peace is different. Some people are runners, some people are gentle walkers, or some people just like to, be in their backyards or whatever. Regular movement does physically in your body, it regulates your cortisol, which is your stress hormone. It sharpens your focus. It builds resilience in a demanding situation such as trading or like lifting or what have you. So it's not really leisure. You can consider that as a part of like training and being your strongest self. There's a discipline element that crosses over. If you have, some physical activity in your life that you prioritize, that is a discipline that will cross over into prioritizing doing the right thing on your charts too. So if that's something that you can embrace, I would encourage that. I know I trade better when I'm on a good exercise routine because it just has me in a different mindset. Hobbies and detachment are super valuable because it pulls you out of the trance that trading can feel like. It can be you can zombie out a little bit into only trading. And then there's a point where trading can feel a little bit like an addiction if you are letting it consume all parts of your life. Instead, if you can also have some hobbies or activities that pull you out of just the charts exclusively, you can make sure that you're not getting too deep into that obsession, addiction part of the world that can breed a tunnel vision and lead to poor decisions potentially because you're under rested and you are overanalyzing everything. You get analysis paralysis, or you start seeing things that maybe aren't there, or forcing trades because you just haven't left your spot in so long. And now you just feel like you need to have something to show for it. Detach a little bit and have that perspective and that balance. And I think it makes us stronger traders by having a little bit of moment to kind of pull out and then go back in when you're ready to be sharp again. Now, last thing on the slide is sleep and recovery, which actually is like scientifically proven as well, that a fatigued brain takes more risk, follows rules less, and processes way slower. So sleep is actually an underrated edge for trading psychology. It really is. Like there's a lot of hustle grind out there in the world in terms of, energy. And that's how we succeed is you hustle and grind and you work 24/7. But getting some actual recovery and sleep, your brain literally works better. Typically MRI based, study based, it will work better if you make sure you're trying to get some good rest and allow it to have that high functioning state. So let's just pull it all together here. Let's make each day manageable. I think that this is how I know, girl. This is how our long careers take shape, is by the intraday choices we make. So if you want a long-term experience as a trader, a big, glorious profession and all the money that comes with that, it comes from mastering each day, right? One trade at a time, one trading session at a time. And the traders who last are the ones who prioritize each session with kind of a modest process-based expectation, not heroic income goals, not like make it or break it, like full energy. I want to throw everything I can at this because I want to make it right now. Those traders burn the frick out. Like that is a very hot candle that is not going to last. Longevity is built by one managed session at a time. So by locking in and doing good trades day after day, by making your system as strong as it can and letting it build time over time, that's when the goals build and build and build, and it compounds. You follow your plan, you grade your executions, you take lessons from all of them, you protect your capital so that you have accounts to trade day after day and let it build. And then you do it again tomorrow and you do it again the day after that. And by letting this all build and create those strong habits and have the strongest system that you can, all of a sudden you look up in 5 years and you have a career as a trader and your accounts have grown and your information, your knowledge, your strategy, your playbook is incredible. It's somewhere you didn't even know you could get to when you were in your year 1 or 2 of trading. That is the potential. It's not whether you're right or wrong that's important, but how much money you make when you're right and how much money you lose when you're wrong. So watch your risk management, trade your best setups, make the best choices each day. I think when you are leaning into the wrong goals, such as I need to make a certain amount of money, I have to fix it right now. I was red yesterday, so I have to be green today. I need to prove to XYZ spouse, whatever, whoever, that I am a good trader. That gets you into sticky situations. That is not really the energy that you need to be bringing to your charts, to your trading situation. Thanks, Groundhog. It is possible. It really, really is. Because look, 100% process ownership, which is us, we get to create a successful system, but it's not easy and it's not fast, but we get to dig into it and make it happen. Prioritize lessons each day that can make us 1% better every day, and prioritize on one good trade and saying focus on the plan. We can't control the market, the price, the direction, the type of day we're going to get given each day, the volatility. That's going to happen. And we just have to respect that, be curious, watch our back sides, watch our risk management. And then the only unit of time that deserves your full attention is one trade at a time, right? One trade at a time. That is where your trading journey is built. The trade you are in right now, the trades that you are in this trading session, that is the journey that you will have. That is the end goal that you'll have, is how you are choosing to manage your trades. That's what you can control right now, is what you are doing. And if you're honoring your system to the best of your ability. And then the compounding, the execution, all of that comes after the fact, So I'm a little bit out of time. The last couple slides were more just kind of motivational, what's in our control, out of control, but we've covered all of that, so I don't need to bring it all together. But I do want to say that the best traders, from all the traders that I have met over the last 5 years, the best traders are not the ones who predict the most, who say they knew it was going to happen and they put all their contracts on and they slayed it. They're the ones who react the best, who aim for neutrality and flexibility and openness and a strong process and locking in their risks so that they don't get upside down in a dangerous way. They choose to control what they can and to accept what they can't, and to just show up every day and do their best work from their best stance. And so I really think that that is how we all need to approach it. I can control my system, my risk, how I choose to respond and be aware of my emotions. And the rest is just something that I have to be aware of, will impact my situation, and guard myself to do my best. So show up calm, prepared, consistent every session, and then repeat. And that's the game, that is the game of trading. That's how we get to the profitability that we're all aiming for. I think that is how we want to approach this. Obviously today, we're expecting some very important news geopolitically from Trump regarding the world. And as a person, as a trader, as a mom, as an American, I have nerves for the situation. And I, as a trader, am not going to trade it. I'm going to just observe and keep my account safe and pray for everyone involved for the best outcome, and respect my trade plan, which does not have anywhere in my trade plan to chase massive news. My trade plan is strategy-based, pattern-based, like market context-based. And so just no matter what happens today or any day, control what you can, which is the best strategy you can, with a plan made with your rational brain and a choice to honor it. So that's what I'm doing. That's what I do best when I do. And no one is perfect. I'm certainly not perfect. So this, like I said before, these lessons on Tuesday remind me of the trader that I am as well, and who I always want to show up as well as I hope that gives you guys that some kind of energy. So I went a little long, but I really like talking about all of this stuff because I think it's just a good topic. Thank you guys for hanging with me on this lovely Tuesday afternoon. If you have any questions or concerns or feedback, I am available for all of it. And then, I do post my recordings on the YouTube channel sometime by the end of the day today, for anyone who wants to check it out again or share it or whatever you have you. Thanks, guys. I really appreciate that you guys coming and spending this time with me today. Stay safe. Hit me up in the DMs or in the chat thread anywhere, any questions that you have. But you guys give me feedback anytime and I will create whatever conversations you guys want to have with me. Okay. Stay safe, guys. I know Breezy and BluSky are intending on streaming later today, so if you're at the markets and you want to see what's going on out there in the world, we are here at BluSky a lot of the time, so check in anytime you want to come hang out with us. All right, I'm called a wrap. Take care, everyone. Thanks for being here.